Welcome to a short clip for you on a topic that you might think is dead easy, really, and a lot of people think it is, but it's not. And I'm calling this one How to Advise Mortgages. How to Advise Mortgages. Now you might think, well, hold on, Paul, isn't that what the job's about? Isn't that what it's all about, how to advise on mortgages? And it is, effectively, and a lot of people, they think it's easy. They do their exams, their CMAP, which, by the way, doesn't really prepare you for mortgage advice, if I'm honest with you. Does it? Well, not the specialist mortgage market anyway. So how do you advise mortgages? So let's talk about this now. Let's get into why it's not easy, but it can be easy if we structure it a bit more. And we're talking here about fact finding. We're talking here about exploring client needs so that they know exactly what kind of mortgage they want. Because at the end of the day, your job as a mortgage advisor is to give advice on a mortgage. You need to advise the right mortgage. That's it. It's what you're paid to do. But it's not just the mortgage. There's many other things going on as well. Now, the key concept here is that we must coach nowadays. We cannot tell the customer what to do in a vigorous, authoritative way. You can if you want to, but people, younger generation, older generation, don't work kindly to that kind of interrogation or dictatorial attitudes. They want to be coached. So I want you to think about being a coach now, a financial mortgage coach. You can call yourself a coach if you want to, but the customer might be a bit confused because they're probably thinking of advisors. So coaching is not telling, coaching is asking questions. Coaching is drawing it out from the customer what they need so you can then recommend the right product. It's simple as that, really. You go to a restaurant, if you're allowed to one day, and the waiter comes over, and if he or she is good, they will ask you questions in order to find out what it is you're wanting, and then they make recommendations. That's exactly what you do. Now, the other thing to think about when exploring for the mortgage fact find, call it what you like, is, yeah, you got a lot of compliance, and many of you have got systems, you've got like fact finds on the screen with question after question after question, which you've got to follow in that order. And your compliance people will wrap themselves around it and make sure it's all compliant and correct. Because if you get it wrong, you could be sued for hundreds, thousands of pounds. You don't want that. So, but you've got to have a conversation. You've got to have a decent experience for the client. I remember working for a lender 4 or 5 years ago now when MMR came in, and they were doing 3-hour long meetings. 3 hours long they were doing their meetings for. And I was watching these, because I was observing these things, giving coaching, and I was watching these poor clients. After about 45 minutes, they just died. Not right, not on. It's just ridiculous. So make it an enjoyable experience by asking questions, having a conversation around the needs that the customer has. Don't make it an interrogation, question, answer, question, answer. You don't want to do that. You just don't want to do that. It's just not fair, is it? It's just unethical. It's rude. No, ask questions, become a coach. Remember the adage we've talked about before, whole, part, whole, which is my sort of methodology here, whole, part, whole. And what we're talking about there is when you are giving mortgage advice, talk about the whole service. Talk about the full service package that you're going to be doing for the client. Talk about it right at the moment one, the way you operate, the way you work, how you help your clients. You're looking at a full service package that allows the customer to buy the house with an appropriate mortgage loan that's fully protected and looked after. So if anything happens to them during the whole term, the house the mortgage is paid, the house is rebuilt in the event of burning, all sorts of issues. That perils that throw at you will protect them for that. And you make sure they get the right mortgage that suits them so it adapts to their lifestyle as they move forward. That's the full service package. Talk about it all. Don't talk about the parts. You can when you recommend the stuff later, but don't talk about the parts because it's not a part, it's a service package that you're giving. This is much, much more than just small things like a mortgage and a fixed rate and stuff like that. So that's the key concept. So don't bolt on is the method. Don't bolt. Here, let's put that one down there for you. Don't bolt on products. If you refer for wills or lasting powers of attorney, which you should do, of course you should, don't bolt it on at the end. Oh, I've forgotten to add this, or oh, great, you got your mortgage, have you? Great, okay. Well, let's now talk about protection, shall we? The client's not going to go there. It just isn't the way. It's not the way it works. So yeah, whole happy with that. So we then have a conversation, and you ask questions in a nice, easygoing way, with open questions, with conversational patterns, with good tone of voice. I talk about all that in my other videos. So have a good conversation around a number of topic areas to build up the mortgage need. Now what you need to do is to ask questions about specific need areas the client's got. Clients call it various things, but you've got to work on these need areas. Find out what their issues and thoughts, problems, goals, desires are around these need areas. Make a note, and then when you recommend the mortgage later, you can recommend the right one. And when you do your suitability letter, it's the right suitability letter. It's correct. That's what you want to do. And it's easy to understand, and it's tailored to the client. That's really where you go. So what sort of things do you talk about? Well, you first of all, let's just write these up over here, right? You want to talk about risk, of course you do. You want to talk about the customer's risk attitude when it comes to a mortgage. Are they cautious? Are they adventurous? This kind of steers towards interest-only or repayment mortgage, but most people will want to have the mortgage fully repaid. Don't suggest it, ask them what they want to do. They might be interested in interest-only mortgage, you don't know. So what's their attitude around taking a bit of a risk with paying off that loan? And most people don't really want to take a risk, do they? Let's get two different pens going here. Have a little conversation around this topic here, your forever home, as we call it, or Kirsty and Phil call it, don't they, in their programs on the telly? Your forever home. Is it their forever home? What's their future plans around their mortgage? So what's their future look like around their house purchase, their future plans? What are they going to do in the future? Are they going to move around the UK? Are they going to move abroad? Or they're going to stay in this house for 20 million years. Find out about that. You can do a lifeline. I've talked about that in previous videos. You can find out where they're going to go in 5 years, 10 years time. People probably don't know, but they might have an idea. So find out about future homes, future ownership, where they're going to be living for a long while. Really important, that one, isn't it? Find out a little bit more about payments, payment thoughts. Mortgages, of course, are paid monthly, but will they be wanting to maybe put in some lump sums into their mortgage at some point in the future? Will they come across some money? Have they got inheritance coming up, possibly? Do they have bonuses from work payable lump sums? Are they self-employed and they get a large amount of money for some reason? Are they going to want to pay off lump sums on that mortgage as an option? Is that something they're going to be thinking about? That's something to think about. Payment stability comes into its own. Let's put that one over here, shall we? Payment stability. Are they looking for the payments to stay the same? How do they feel about interest rates going up or going down? Do they worry about budgeting on a regular basis? Do they want stability of payments? Don't say, do you want stability of payments? Yes, please. Don't go there. That's just, a computer can do that. You're a professional. You can ask questions. You're a coach. Find out, how do they feel about it? Why do they want stability? What's their thinking behind it? What's their rationale? Drill deep into the psyche of the individual, and then you'll find that out as well. While you're on that topic, find out about the impact on them of death, impact of dying, or getting an illness. How's that going to affect them? What do they think about that? How do they feel about that when it comes to the mortgage? Ask it now. Don't wait till later to talk about protection. Ask it immediately. That's the key to that one. Just find out about their views, opinions, fears, goals, dreams, aspirations, concerns about dying and death, and having a mortgage over your shoulder, over your head, that you can't afford because your partner's died and she isn't earning the money that she was earning before. That's an important one to do as well. Others for you, a bit obvious really, some of these, but find out about their employment. What's their future of employment? Where they're going to be working? Are they looking for self-employment maybe at some point? Find out about their employment, current obviously, but future as well. That comes into the mortgage as well. The status side of their employment. Find out how they're paid. Are they freelancer? Are they an owner-director? Gone are the days where it's just like employed or self-employed and that's it. No, that's old hat now. People have gig workers, freelance workers, owners and directors, limited companies, umbrella companies. Find out a bit more about how they're paid and the future they're paid as well. That's a key one as well. Find out how long they want the mortgage for. How long do they want to make payments for? How long do they want to keep a mortgage for? And it's not just this mortgage, there's future mortgages as well. People have series of mortgages throughout their lives. Do they want to have a mortgage until they retire? Do they want it earlier? Do they want to get rid of it at some point? What's their views around that one? While you're on that topic, find out a bit more about their retirement plans. When are they looking to retire? What sort of age are they hoping to retire? They may not have any idea at all. You know, if they're 25, for example, retirement might be 70, 75, might be 50 years away. That's a lifetime. That's half a lifetime anyway. So, you know, just ask the questions around that one if you want to. Probe a little bit around about other debts that they've got as well. What other debts do they have? Let's sneak that one in there for you. You're going to have to do this anyway on the fact find. It's a hard fact, you know, because it affects their monthly payments and their affordability in debts and things. Of course it does. But what sort of debts do they have? How do they feel about debts? Do they want to get rid of debts? Do they want to maybe consolidate some debts if it's a remortgage? Find out a bit more about that area as well. That's a key one. Attitude to debts as well comes into it. So not actually just debts as well, but it's the attitude to having unsecured debts. Different one to risk over here. This is for the mortgage. The attitude to debts is, how do they feel about having unsecured debt? I mean, I've had a credit card debt all my working life. Since I was 19, I've had a credit card balance. Don't worry me, it can be paid. It's no big deal. I'm quite okay with credit, with unsecured credit and loans and overdrafts and stuff like that. You know, as my bank manager says, your overdraft, Mr. Archer, it's not a target, it's a limit. You know, so I'm always okay with it, but some people are not. So ask about that as well. History of debt, of course. Payment history. Find out about what they've done in the past of their debt. Have they been okay with their debt? Have they had any problems? Do they have a coffee stain on their debt report? Find that out now before you go to any kind of debt or sort of credit search or anything. You're going to have to do anyway. You have to ask them a question, but find out what their attitude is. So these are just examples of the sort of conversations you're going to have. Now, obviously, this information can help you advise the right mortgage. Of course it can. If you get a good indication as to these areas for the client, payment stability, forever home thinking, impact of death, future plans, payments, lump sums and things, the risk attitude, of course, comes into all the kind of risk that they have to debt or having borrowing, you can then recommend a mortgage that suits their needs, and you can do a suitability letter which confirms all of that. It's as simple as that, really. But here's the last point, really, that you've really got to hammer home, and I'm going to put this in red because it's important, and I'm going to put this over here. You've got to find out why. There you go, why. Why do they have a risk attitude of cautious? Why do they want to have their mortgages paid off? Why do they want to retire early? Why do they want to have death protected? Why do they want to have payment stability? Why? Don't just take the first answer. Find out why, make a little note on it, even if it's a free field on your fact find. Just type it all in, get it all written up. And you can have a really good conversation cycle around this sort of stuff. Kind of thing you want to do is, okay, Mr. Brown, what I want to talk about now is payments on your mortgage. You know, a lot of people pay monthly, some people pay lump sums into their mortgage. So lots of different ways of doing a mortgage. What are your thoughts around that? You know, keep it nice and open. How do you feel about that is a great question to ask. How does that feel for you? How does that seem to you? What are you picking up on that one, Mr. Brown? Ask the questions, probe away, get their thoughts. Don't lead them. Whatever you do, please don't lead them. I've seen hundreds, thousands of mortgage advisors leading people. It's done by compliance because they want you to have this reason, so they can do a suitability letter and everyone's covered. But you end up leading the client. For example, so let's talk about lump sum payments then, Mr. Brown. Would you like to make monthly contributions, or would you like the flexibility to be able to pay lump sums? Oh, yes, please, I'll have one of those. You know, that's leading. You don't want to do that. Have a nice conversation. Remember, you're a coach. You're a professional. Your competition in the future is tech. It's bots. Computer bots, Alexas, they can all do this thing. They can all ask these questions. Yes, no, yes, no, yes, no, yes, no. That's what they'll do in the future. You are better than that. If you want to survive against the rise of the robots, then you need to get good at this because that's what you're paid to do. I hope that's been useful. A nice little update for you on how to advise mortgages. Such a simple topic, but not when you think about it like that.